XRP exchange supply has seen a sudden and notable drop in recent days as investors moved millions of tokens off major exchanges. The decline in exchange reserves is a clear indicator of a shift in investor behavior, with large holders transferring assets into private wallets rather than preparing for immediate sales. Over the past 24 hours, more than 35 million XRP were removed from exchanges, even as the broader crypto market continued to show weakness. This movement reduced XRP exchange reserves from 2.744 billion to 2.709 billion, representing a 1.29% drop in just one day. The outflow occurred amid continued volatility, with XRP trading near $1.33 after briefly dipping to $1.31. While the price remains under pressure, the declining exchange supply has sparked speculation that investors are positioning for a potential recovery. Typically, when exchange reserves fall, it signals that holders are less inclined to sell immediately and more likely to store tokens securely. This trend is especially. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Notable during periods of uncertainty, as it suggests confidence in future price performance. The data from crypto analytics platforms like CryptoQuant highlights that large withdrawals often precede market shifts, especially when traders are moving assets into long-term storage. Despite the bearish short-term price structure, the falling exchange supply creates a different narrative. It indicates that holders are not actively preparing to sell, which could mean they are waiting for a stronger market entry point or are confident in XRP's long-term potential. Meanwhile, the broader crypto market remains weak, with XRP recording a weekly decline of more than 5%. This decline is part of a larger trend affecting most major cryptocurrencies, but the specific movement in XRP's exchange supply suggests a divergence in investor sentiment. The fact that so many tokens are being moved off exchanges during a downtrend is unusual and may signal a turning point. Investors are often cautious during volatility, but the scale of the outflow suggests a broader shift in strategy. If this trend continues, it could indicate that market participants are preparing for a larger recovery, even if the current price action remains bearish. The next key signal to watch is whether the decline in exchange supply continues or stabilizes. If the outflow persists, it could reinforce the idea that investors are positioning for a rebound. On the other hand, if exchange reserves begin to stabilize or even increase, it could suggest most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Shift in sentiment back toward selling. The movement of XRP from exchanges into private wallets is a clear signal of investor behavior, and it's one that traders and analysts are closely monitoring. While the price remains near $1.33, the underlying trend in exchange supply is a more important indicator of future market direction. The next few days will be critical in determining whether this outflow is a one-time event or the beginning of a larger shift in market sentiment.